Good evening, everybody. Okay, for those who don't know me, I'm Unmesh Bhome. I'm the chairperson of the CPE committee, and it gives me immense pleasure to welcome you for this very important session, probably the hot topic nowadays on withholding taxes and the double taxation avoidance agreement impacts for most of the businesses who have interactions with the group companies or the suppliers or the customers overseas. Before we begin this event, we would like to thank His Majesty Sultan Haitham bin Tariq, our sponsor CBFS. Dr. Rajesh is representing CBFS for us. Our platinum sponsor, gold sponsor, silver sponsors, and our corporate members as well. May I request all of you to please stand up for the ICI motto song, please.
य एष सुप्तेषु जाग्रति य एष सुप्तेषु जाग्रति कामं 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 कामपुरुषो पुरुषो निर्मिमाणः निर्मिमाणः तदेव शुक्रं तद्ब्रह्मा तद्ब्रह्मा तदेवामृतमुच्यते तस्मिन् लोकः शतः सर्वे तदूनात्यति कश्चन एतद्द्वैत 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 एतद्द्वैत.
Thank you all. Please be seated. Now I request our Vice Chairman, CA Jim, to please deliver the welcome address.
Thank you, Unmesh. On behalf of Chairman CA Sajeev Surendran, I welcome all of you to this event. After COVID, we were meeting, we had a couple of events, but the attendance was not that great. But today we have a good number of attendees. I think our superstar Gaurav Kapoor is attracting the crowd today. So good to see you all. Dr. Rajesh, welcome. We have a couple of past chairpersons also, good to see that. I would like to brief some of the activities which is going on, which is under in process regarding the chapter. One is the CFO and accountant training program, which we are planning to conduct in association with the Ministry of Commerce and the Chamber of Commerce and Industry. We have requested some of the members to join hands to mentor these Omani youngsters. And we have seen a lot of people came towards this. And we are expecting more members who are having at least more than 15 years of experience to be mentors to Omani youngsters. In addition to that, we have Onam celebration coming up. September 3rd, we are planning for a grand Onam celebration. It's a celebration after a long time. So Ambassador Excellency Amit Narang agreed to join us. So we are looking forward to meet you all with the families. Please join. Another thing is the World Congress of Accountants. As you are aware, it will happen in Mumbai in November this year. So we hope that most of you have registered. So still the window to register is open, and chapter is giving 50% discount on the registrations. Then we are also planning for the international conference, which we are expecting to happen in December 9 and 10th. So we are finalizing the venues, and the planning is in progress. So these are the just briefing of the things which is in pipeline. So I welcome all of you. Over to Unmesh. Thank you.
Thank you, CA Jim. I'm happy to announce that our colleagues from Sohar are attending the session. This is the second time we are doing a live screening for Sohar. And I would like to thank CA Avinash from Jindal Shadid to sponsor the event. Thank you, Avinash. A big round of applause for the Sohar members, please. Okay, just a couple of updates to the members which Jim has covered. So we are in the process of finalizing the CP calendar for the year. So the main question is how can you all be part of it? Like this event, what is being organized is based on the inputs received from the members. What are the topics they want us to cover? What are the key things they would like us to have CP sessions on? So you can suggest topics. You can be a guest speaker if you want to take up any particular topic. You can nominate yourself for the topic of your choice, or you can nominate yourself for any panel discussion, and you can team up with the experts you believe who have got relevant experience, which can be of any benefit to the members. So there is a link shared on WhatsApp group. Those who have not got it maybe can get in touch with us over email or over WhatsApp group, so we can again share the link to share your inputs. This is the award which we have announced in the last event. The paid member who attends the maximum CP events for the period from 20th June to end of October will win the the registration to the World Congress of Accountants. So I hope you're all tracking that you are attending all the sessions and ensure that your attendances are getting uploaded on the CPE website. We had recently circulated one circular from ICI for the articleship, which can be uh, conducted by the members in the country. There are specific guidelines. We'll be shortly arranging for a session and a guidance meeting from the institute's office. So those of you who know there are CA students in the country or who want to take up articleship in Oman, they can join the group, connect with Sangeeta ji. She is the chairperson for the Students Affairs. World Congress of Accountants, we did announce that we are going to sponsor 50% of the discounted fees. Those who register, I think the deadline is 15 September, right? So those who register before 15 September will be getting the 50% discount of the discounted fees for the registration. It can be virtual or physical as well, whatever mode you prefer. There's one more program which is being launched, the Omani CFO program. So Muscat chapter in association with the MOCIIP has taken the initiative to share the knowledge of our members who have got relevant experiences to educate and guide the Omani CFOs. So these details have also been rolled out on the WhatsApp group. So please share your name and the topics you would want to cover to contribute to the society. Back to the fraternity here. You can connect with us on the Facebook. We have got a Facebook page. Follow the Facebook page. Send a meeting request. Sorry, not a meeting request, a friend request. Same thing with LinkedIn, so you can get the updates. Okay, now my favorite one. You want to have a quick 5 minutes quiz before Gaurav takes over the session? Yeah? All ready? Please keep your mobile phones in airplane mode, please. I don't want anybody to Google out anything. So can anybody tell me when did Oman sign its first DTAA? And it was with which country? France? UK? Can you tell the year also? So I got France, UK, USA, India. Okay, the first one was with France in 1989. Okay, the latest DTA was signed with which country and in which year? Sure, Qatar, which year? But that's not on the website. So my answer is Sri Lanka in 2018. So I've gone by the government records, okay. Uh, in which year was the first income tax law issued in the Sultanate? 74? 71? I think you are debarred from asking next question. 71 was the first income tax law. And then linked to this one, there was income tax law for companies which was issued later on. So can you tell me the year in which it was issued? No, it was done in 1981, wherein they incorporated the companies also. Earlier it was only for the proprietorship and the individual ownership companies. In which year the tax rates were changed recently before COVID, and what was the change? 12 to 15%. See, we are all up to date. What is the withholding tax rate? Yeah, generally 10%, right? Yeah. So I'm correct. Okay. There are depending on Gaurav will take us through the session. Depending on the DTA, I think there can be a change in the withholding tax rates, whichever is beneficial to the SAC. Okay. So thank you all for being patient with my quiz. I think every time I like to have some session on quiz before we start the main session. Moving on, I would now request CA Jay to introduce our speaker, CA Gaurav Kapoor.
Good evening, everyone. Today we have our very own subject matter expert, CA Gaurav Kapoor. Mr. Gaurav Kapoor is chartered accountant from ICAI as well as law graduate from Guru Nanak Dev University. Gaurav is currently employed as tax director with PwC Oman. He started his career in 2005 as practicing tax lawyer and became qualified in 2007. After qualifying, Gaurav started his own firm. However, soon he got an overseas opportunity and relocated to Muscat in 2009 for new beginnings. In Muscat, he started with Big Four firm and worked almost 4 years before moving to PwC. Currently, he is director as well as tax reporting and strategy leader for Oman. During his experience in corporate tax, international tax, M&A, VAT, and GST, and inbound advisory in Middle East and Asia, Gaurav has worked with clients across all industries, including oil and gas, government, sovereign wealth funds, financial services, construction, and the list is long. He has led several different teams, and his outlook on leadership is making others better because of your presence and making sure that impact lasts in your absence also. He has served as chairperson for student affairs and professional development for the Muscat chapter of ICI in financial year 21-22, and currently he is secretary of Muscat chapter for FY 22-23, a role he is thoroughly enjoying and managing effectively along with his primary role at PwC, which is very evident from all his efforts in the events. He also has also conducted many seminars and training sessions on various tax related topics in Oman and internationally. Outside work, Gaurav is huge sports enthusiastic. Friends view him as energetic and full of spirit, with a passion of his career that is marked by his success to date. So, with huge round of applause, let us welcome our speaker, CA Gaurav Kapoor.
So first of all, thanks to the Muscat chapter for giving me this opportunity to come and speak on a very interesting. No, I was out of the whole organization for this event for the obvious reason that I was the speaker. That was the reason behind it. Thanks to few of our Omani friends here as well who have joined. And thanks to the Sohar members joining live from Sohar. This is the first time we are doing it through a Zoom platform, and I hope this is successful and we continue to do it for future events as well. Based on also at the time of registration, there was a lot of questions that were submitted, which were both at a very starting level as well as a few complex questions as well. So the presentation will try to cover all the aspects. Of course, if there is anything missed, you can always ask questions during the presentation or in the end as well. We have people from tax authorities as well. We have people from the taxpayer side. We have people from the consultant side. So just as a disclosure, the views expressed here are purely personal. It may not concur with the tax authorities or with the taxpayer's view. I said purely personal, nor with the consultants as well. So, because you read a sentence now or anywhere, different people can interpret it in different ways. And it will continue how much we evolve in life, right? So that's all about communication, right? So let's start, and then we'll see how we land up. I think we have 2 hours, but we have last 30 minutes dedicated to Q&A as well. But as I said, you can ask in between as well. Of course, I am there. These are the various topics that we'll cover. Let's start. I think Unmesh ji has laid down the foundation of the rate of withholding tax, which he said generally 10%. We'll know about why he meant with that as well. So what is withholding tax? Anyone?
Basically, it's a way of remittance tax when you are sending money outside Oman for a certain services which you have acquired, and there are a qualified service on which it is being deducted, and there are exceptions to it.
Yes, that's also one element of it.
So government feels that, there are some entities who are outside Oman earning income from the Oman, so they want to bring them into the tax net, and government don't want to miss out on that opportunity of earning tax. So basically this is a way of getting money collected from the outside Oman people or entities.
Yes. So this is the whole gist of withholding tax. I will just say it's a tax deducted at source, because some of the things that you said were very particular in terms of, so it's just a tax deducted at source. So source is where you earn the income and from where the payment for that income is generated. The other things, whatever you said, is also true, but that is very specific to a local legislation, which is the Oman legislation. Different countries can have different legislations. For example, as most of you are from India, you would know that in India, even local payments attract withholding tax. So those are very specific, country-specific rules. Withholding tax rate, in Oman, the withholding tax rate is 10%. That's a flat 10% on the gross payments. When it is due? Yeah. So any payments that you make during a particular month, the withholding tax has to be remitted to the Oman tax authorities within 14 days of the next month. Now, there are few very peculiar conditions which all of you have said that need to be fulfilled to qualify a payment to be deducted for withholding tax. The first condition is specified payments. The payment has to be a payment out of the 5 or 7 categories, which we will list down later in the presentation. So its payment has to be a specified payment. Payment has to be made to foreign tax residents. Payments are made by enterprise or basically a taxpayer defined under the Oman income tax law. It also applies to ministries or autonomous authorities. This element is important because when I said taxpayers as per Oman income tax law, some of the ministries may not be taxpayers, but they are still obliged under the withholding tax to deduct payment if they are making these specified payments. And last but not the least, and this is very important because it's linked to the previous condition that payment has to be a payment to a foreign entity. Many times, a foreign entity would be working in Oman, and thereby, because of that, they end up creating a permanent establishment in Oman. There are 3 rules by which an entity can create a permanent establishment. It could be through a fixed place of business, through a dependent agent, and through service PE. So there are detailed rules for under each of these 3 categories under which a permanent establishment can be created. In today's session, we are not going in detail what is PE and how it is created, but this is important because if you have a PE, then and the income that you are paying to that particular PE is being declared by that PE in Oman as part of their tax filing, then you don't need to deduct withholding tax. And this last condition just clarifies that if you are making the payment to the same PE, but that PE is not declaring that income in their Oman tax returns, you are still liable to deduct withholding tax. Yes. So in conclusion to all of this, it is very clear that in application of the Oman tax law, either a withholding tax would apply or a corporate tax would apply on a certain payment. except there can still be few payments which are not specified payments. Then on those categories of income, there will be no withholding tax. And of course, there can be incomes where corporate tax may not apply as well.
Like, just one question, like, can a company having a CR in Oman be not a PE of Oman?
No. If you have a CER, you are a taxpayer in Oman.
Okay, so
Then
automatically it is like
then it's not a PE, it falls under the Omani company taxpayer.
company directly.
Yes. Yeah, CR becomes a local Omani company. PE is specific to, okay, one of the biggest differences between a PE and a Omani company is the legal presence. When I say legal presence, a PE will not have a commercial registration, but it is still a taxable presence. Fine. I can say, yeah, that is a broader definition and it can be clubbed within that as well. Technically, there can be some differences, but for current discussion purposes, we can say yes. Okay, just a bit of history into the Oman tax law, more specific to withholding tax. So, as Unmeshji said in the quiz, the first law was issued in 1971, but that 1971 law did not have any provisions on withholding tax. Then that law on the company's tax was issued in 1981. And then in 1981, also the provisions for withholding tax was not there in the first law that was issued. So anybody knows when was the withholding tax provisions were first introduced?
1989?
So one of the amendments that are written is the hint. So these 94, 96, 97, 97, 2000, 2003, these are all the amendments to the Oman corporate income tax law that has happened over the years until 2009 when a new income tax law was issued, which is currently on. Yeah, so the first introduction of withholding tax happened in 1996. Right? And then at that time, there were these 4 categories of income on which withholding tax was applicable: royalties, research and development, management fees, and rental of equipment. So these were the 4 primary categories on which withholding tax was applicable. In 2009, a full-fledged new income tax law was issued, and they merged the corporate tax, the tax on the companies, as well as tax on establishments, and consolidated one income tax law was issued. And under that, again, there are 4 categories. The only category that they merged was, they not removed it. The rental of equipment was also earlier there within the definition of the term royalty. So they removed it as independently, and they put up a new separate category of use or right to use of computer software. So this was the change that happened in 2009. So applicable from tax years 1st January 2010 and onwards. Then the first amendment, and there where the consultants' values was suddenly increased when the amendments of 2009 was made, 2017 was made, and 3 more categories of specified payments were introduced. One was dividend, one was interest, and the last is performance for services. So we'll discuss all of these in detail as we go further.
When you say that they have removed the rental of equipment and they merged it with something else, are you referring to the right to use of assets, for example? Can we say the right to use is replaced with the rental of equipment?
The definition of the term royalty in 1996 itself also included rental of equipment within it,
Yes.
and it was also a separate category.
Okay.
So there was no need to mention it as a separate category. So they removed it from separate category, but technically it is already included within the definition of the term royalty.
Royalty.
So the 4th word that came in 2009 was
It was no point.
use or right to use computers. So effectively there is no change in the Yeah, the wordings have changed, but not in the application.
Mainly, this whole act emanated from the oil and gas sector, if you look at it. And that's where all those categories got covered.
Yeah.
And after that, the other private sector, the minor payments are there. If you look at royalties or rental equipment, at that time, mainly oil and gas sector payments have to be
Agreed.
taxed. That's the reason.
Yeah,
they
yeah,
introduced.
agreed, agreed. The original, even in 1971 or in 1981 onwards, the original motive was to start from the oil and gas sector. Yes, it has widened. There were reasons for, in 2009 law, rationalization of the tax rate was also done for the first time. Before that, there were different tax rates for different types of taxpayers. So all that was removed as well. And then 14th, Ministerial Decision 14 of 2019 was also issued, which only clarified the provisions of the previous amendments of 2017. And we will run through that as well when we go in detail of the specified payments. I already discussed this, that why PE determination is important, because if you have a PE and you are making payment to the PE, then no withholding tax would apply. So in that case, it is important to know or check with the foreign company if you are making a payment in case they have a PE. Then your job becomes much easier. You don't need to deduct and pay the withholding tax. So we discussed that these are the three. We'll not go in detail for today's session. So these are the 5 categories. Why I say 5? Because interest and dividend and management fee and performance of services are part of the same as per the tax law, but we'll go in, discuss in detail as we go further. So first is royalties. Royalties definition under the Oman income tax law is in line with the definition under OECD and in line with the definition under most of the tax treaties. So use or right to use intellectual or proprietary rights, patents, trademarks, licenses, all that is also covered. And last is one which I was referring to, rental of equipment, use or right to use, industrial, commercial or scientific equipment. So all types of equipments are covered within this definition of royalties. In addition, it also includes information concerning industrial, commercial or scientific experience, and last but not the least, granting of rights for exploration of mining or any other natural resources. So this is the principal definition of royalty. Just before I go further, we mentioned that there were 7 categories or 5 categories. I'll come to this question. I just put the questions now. You can think over as I speak, but we'll come back to this question in next 5 minutes or 7 minutes. Is why categorization of a payment in any of these categories is important if the tax rate is same as 10%. Remember, we said tax rate is 10%. And then we have different categories, but it is significant important that under which category your payment falls. It has to be identified. Not only from a compliance perspective that you tick the right box in the form. So we'll come back to this question. You can think over as we discuss this further. Consideration for use or right. So the royalty definition which we just discussed is prescribed in the Oman income tax law. So we have clarity. Whereas consideration for carrying on research and development is not defined. So whatever I'm saying, this is from common practice, common experience, or some experience from other jurisdictions having similar provisions. So as research and development would say, as a common man, it is that if you develop a new product or you develop a new service or any technology, all that is covered within the definition of the term research and development. Consideration for the use or right to use computer software. Again, a term which is not defined, and when it was originally introduced in 2017, it again had, 2009, it had some bit of its ambiguity in it. It has been sorted out over the years through practical experience or various decisions which the tax authorities have issued to the corporates or the taxpayers from time to time. So I'll just give few examples so that all those gray areas which you might have doubt is cleared here. First is transfer of copyright. Whenever you buy a computer software, the main point that was being argued between the taxpayers and the tax authority was, I have bought the software. I have purchased the software, which is perpetual in existence. So it's a purchase of a good for me, so it should not fall within the definition. So that was the main argument from a taxpayer angle. But if you read through most of the licenses of the computer software, there is an element of license or AMC, which we called annual maintenance charges, which is embedded within it. So as the first three, which is transfer of copyright or as well as site license, etc., these will most likely to be fall within the definition when you have to make regular payments to keep the license in working condition. That means it has a specified life and therefore it will fall under this definition. The moment if you say that it is perpetual, you can possibly argue that it does not fall under the category of use or right to use computer software, but then if you recall, when we read the definition of royalty, it has patent, trademark, license, all that embedded within it as well. So a license of a computer software is then falls under the royalty, or most likely to be fallen under the royalty. And last but not the least is on the services, the AMC part, which is also very prominent practically for corporates to have it. Perfectly fine to argue that it's not a product, it's not a license, it's a service. So from 2009 till 2017, the corporates have been arguing and successfully arguing, and there was a basis for that no withholding tax is there on services, so please do not ask us to pay on the AMC part. But when 2017 amendments came, services were included. So this falls not in the computer software category, but under the services category. So withholding tax would still apply. It's an evolving process, but in this case, it was the clear amendment of the law in 2017 and the new categories that were introduced in that year. Okay, so next is payment for management or performance of services. I'll just touch upon the management part or management fees, etc., which is actually again not defined in the law. From a common perspective, I will just say, and it will be vary from case to case and it can be subjective to different taxpayers. If a critical management function is performed, that can be termed as a management fees. In the agreement, you write management fees or fees. For example, I can say if, depending on whoever is paying a consultant, they will say, you enter an agreement, but you define it in a way that it is services. So till 2017, it was not applicable. You will say, no, it is not management fees, but it is only services. But in 2017, when services is included, this ambiguity or this imbalance between the tax authorities and the taxpayer or the tax law and its interpretation was also clarified. So as of today, whether you say management fees or services or supervision services or whatever you say, it falls within the ambit of the withholding tax. But I'm just giving you that previous to the ambiguity being ruled out, the words defined in the agreement or the intent of the agreement was very important to understand whether it is a management fee or not a management fee. Yeah, so I'm not touching VAT here, otherwise there's a endless discussion we will go into. So even when you ask questions later on, please refrain from asking any. So then services was, as I said, was introduced in 17, but there is still today no definition of the word services that was provided for. In 2017, it was a common understanding that anything which is not goods will be termed as services. And then in 2019, when the ministerial decision was issued, there were very specific 7 categories which was prescribed, which will not fall under the definition of the word services. Apart from that, everything else will be termed as services. So those 7 categories was participating in organizations, conferences. So if your organization has offered you to go to Dubai, Denmark, UK, or anywhere to attend a conference, so all the expenses or the expense to register for that conference would not be liable to withholding tax under the category services. What I say, it has to be clearly in that way, not liable to tax under the category services. If it falls something else, you have to take care of it. Second, trainings. If any overseas trainings are there where you send your employees and you pay for that training courses, those will also not fall under the definition of services. I'll come to that. That is a very, very critical, and I know that. And when I come to 7th and there is a slide specific, I'll cover both of them together. That is there, and it is covered in this just 3 minutes more, right? The third is transportation, because these are more or less understandable and acceptable parameters, and I think the audience would have least questions. And I know based on the questions we got at the time of registration, I'm trying to cover most of that and will focus on those parts more. Then transportation and shipping of goods and insurance on that. So specific for freight forwarders or that industry. Then air tickets and accommodation. So this was specific to the travel industry. So for every exemption here mentioned, there was a thought process, and that's why it took tax authorities 2 years to issue the executive regulations, to understand the industry specific issues. Industry specific meetings were have happened during that time, based on which these specific exclusions from services was detailed in 2019. The next is board of directors meeting. Reinsurance, because for insurance is fine, you do locally, but reinsurance is, the objective of reinsurance is to reduce your risk and not to earn a service from outside. So there's a rationale, right, against each and every exemption from the definition of the word services. Then comes this last one, services performed in connection with an activity or property outside Oman. So I'll just give one perspective to the place of performance. So what happened in 2017 when the services was first introduced, and it had a great impact because every company would take some sort of services from outside Oman, right? So suddenly their cost will increase by 10%. So what happened is they went back to the tax authorities and started asking, what would you mean by the term services? What are the conditions, etc., etc. So one common theme that came out at that point of time was the services, if are performed wholly outside Oman, not partly also, in that case, those specified services, withholding tax would not be applicable. And this was also there in the FAQ section of the tax authorities. And there were a number of case rulings or confirmations, because there's no concept of ruling, so let me not use that word. A lot of confirmations which was sought by the taxpayers was confirmed by the tax authorities in writing to them, that services performed wholly outside of Oman, withholding tax would not apply. With the passage of time, this interpretation kept on changing. Then in 2018, in March, okay, just before that, in December or somewhere in December, January, depending upon when you came to know, the tax authorities removed the FAQs from their website. And then in 2018, March, they issued letters to some of the taxpayers or consulting firms that withholding tax would apply on all types of services, irrespective of the place of performance of service, right? So earlier, many companies took a stand, fine, this, for example, AMC, your AMC is sitting in India or sitting in Singapore, providing from there, you say they never come to Oman, so service is provided from outside Oman, so I don't have to pay withholding tax. But from 18 onwards, when they removed this, wherever you perform the services, so withholding tax would apply. Then in 2019, this point number 7 came in. And then people started to interpret it then are tax authorities confirming their 2017 position, right? When they say services performed in connection, right? The word connection is very important with an activity or property outside Oman. So there is a difference and a clear difference between this and the 2017 interpretation. Here, the tax authorities wanted to give benefit specific if the corporate, because if you remember the corporate tax, it's a global taxation. So you earn income even outside Oman, you have to pay tax here. So they wanted to give some benefit to those who have branches or PEs outside Oman. So to give that benefit, they said that because based on the legislation of that country, you may not have the ability to open a bank account in that country. So the payments for your PE, say in UAE, just for example, you are making from Oman, but it is benefit for your activity in UAE, right? So therefore, they gave very specific exemption in number 7 here that withholding tax would not apply. But this is important and very important that it was not dependent on place of performance of service. It was linked to your activity and your property, not linked to the service provider. No, it could be that you are taking service from Oman for an activity in UAE. That can also be possible. Service provider can sit anywhere. But there's a clear demarcation between 2017 when it was linked to the service provider and 2019 when it is linked to the taxpayer. Yes, of course, when you write a line and you have some sort of precedent, the interpretational differences can come. Of course, they can come. There's no doubt about it. Okay, so performance of services, some of the practical observations, some of those I just spoke of as well, especially when services and goods are combined, right? So you have one contract for supply and services both. In that situation, it becomes very difficult because it's not only to understand, yes, service has been provided or not, but you have to quantify it as well, right? So if you have one contract which is both for supply and service, it is very difficult for you as well as the tax authorities subsequently to quantify how much, if it is for $1 million contract, how much is related to goods and how much is related to services. So from this experience perspective, it is always advisable that contract can still be same, but the payments for different categories are clearly laid down. And if it is not laid down in the contract for whatever reason, you make sure that when the invoices are issued, they clearly give the description so that there is clarity to you as well as to the tax authorities that withholding tax is applicable or not. Because each tax is different. By applying a tax, whether you should have applied or not, does not mean that you will get away with the other tax. Second, we have discussed this as well, the interpretation of performance of service during the course of time, 17, 19 in the current position. And last is the treaty applications. So remember I said this question that why the categorization of a payment is important in each category. So any answers on that? So each category of specified payment under a tax treaty has a different rate. So if you want to apply for a benefit, you need to first make it clear that under which category it is applicable, and therefore go to that particular country's treaty and that section to see whether a treaty benefit is available or not. We'll come to that. We'll come to that. I just asked a rationale for there, right? Whether we come less or more, we'll just come to that. It's very easy, you know. So dividend. So we mentioned that dividend withholding tax was introduced in 2017. We also know that in 2019, the tax authorities, or not the tax authorities, but through a royal directive, withholding tax on dividend and interest was suspended for 3 years, and which was extended by another 2 years by the by another royal directive for Vision 2040, right? Whether it will be further extended or not, we have people from tax authorities who can share some views if they. So, but for sake of discussion and completion, we'll discuss that because from 5th of May 24, it will become applicable. So you should know the provisions. First, the law clearly just says 3 elements on dividend withholding tax. We know what is dividend, and it is dividend itself is not defined because dividend is there in the commercial companies law. So the same definition would apply. But it says joint stock companies, which is SAOC or SAOG, and investment firms or investment funds. So if those type of companies pay with dividend, withholding tax would apply. So therefore, all other types of taxpayers, whether sole proprietor, partnerships, branches, PEs, LLCs, SPCs, withholding tax would not apply. Clear? So there is no ambiguity in this. And then, based on GCC economic agreement, there is just one.
Do they distribute dividends for LLC and PE?
Yeah, LLC do distribute dividends. Now, I know in the Arabic text of the income tax law or the commercial companies law, they term it as profit sharing rather than dividends. But just for clarity, that why it is not applicable can be termed in 2 ways, right? So, because this question was there in 2017 and it was then clarified in 19. The point was that if they do not, and this was tax authority saying in 2017 as well. So LLCs were not paying in 17 onwards, irrespective of the clarity. That dividend is never declared by these corporates. So if that be the situation, why they mentioned only these 3 elements? And if it is these 3 elements is mentioned, so to avoid that doubt, it is there. But this is for specific to LLCs or SPCs. But of course, branches and PEs, there's no concept of dividend at all. It's only a profit repatriation to the head office. That's the logic behind of not applying withholding.
There is a chance that profit distribution by LLC may be dragged into this definition. Why this dividend on like SOG was because when this law came, CMA went running up to the top, and CMA represented that if you're putting withholding tax on dividend, then it will hurt the economy. So it was actually the hard work of CMA that a royal directive came. So that, as you rightly said, I'm very confident it will be extended. I mean, tax authority guys knows better, but let me tell you, I'm very confident it will be extended. But maybe it may not be extended, but I'm confident. Regarding LLC, I think, as you rightly said, that there can be 2 interpretations. But if my understanding, which can be completely wrong, I'm not a tax guy, if an LLC company is remitting the profit share outside Oman, that is not protected. I mean, only SOG companies are protected, but I think even in the Royal Directive, there is no mention of this. If it can be interpreted that the profit remitted by an LLC company to an overseas owner is in the form of dividend, then I think maybe it may be difficult for LLC.
No, because the executive regulations say that withholding tax is applicable only for joint stock and investment funds. It did not specify LLC as well.
But regulation cannot override the royal decree. Royal decree doesn't say that. So if it becomes, I mean, the tax authority guys are there, somehow I happen to be involved in framing of regulations. But so I mean, you have read it more than me. When you look at the royal decree, it doesn't say this.
Yes.
But in regulation, it says this. And when I read this, I mean, regulation cannot say something which royal decree didn't want to say.
Exactly.
So can this be disputed? I mean, that is why I just wanted to put it on the table for discussion.
But executive regulations do clarify, right? So they clarified this. So if we say that the royal decree was not clear on this, the executive regulations provide clarity on that particular provision. They are not overruling the royal decree, but they are providing a clarity on what is applicable and not applicable. Like that, in that case, you will say services executive regulation will not override it, right? But then these exemptions are provided in the executive regulations and not in the royal decree. Royal decree says services. Then will everything will still continue? No, right? You go into the specific exclusions, which is a clarity provided on a royal decree provision. So if they contradict, yes, then I can agree the royal decree will prevail. But if they provide a clarity, then that is the purpose of executive regulation.
Thank
And then last but not the least, this is also important because of the GCC economic agreement. All the GCC individuals are treated at par. So if you are distributing dividend to a company or an individual, which is a GCC individual or 100% owned by GCC individuals, then withholding tax would not apply. It's practically it might be a bit challenging for the local companies to prove that this payment is being made, but if it is possible through the corporate documents and the ownership of those documents, that it is held 100% by GCC individuals, and we have seen that in practice there are few corporates that work in this way, but very less applicability. Not same applies to that country as well. So if a UAE national is given a particular treatment in UAE, the Omani national will be given the same treatment in UAE as well. Sorry if I misunderstood the question. Thanks for clarifying. Okay, fine then. I thought. Okay, fine. I thought that it was slightly different. Okay, so that's clear, right? Interest. So interest also is more or less settled now. I think when they defined the word interest, it included everything, whether you say it interest or interest in lieu of interest or trying to define something else in lieu of interest. But I think the important part is the exclusions that have been provided for. It's not covered because they still say it is not interest, but it's but they do not even say that it is in lieu of interest. So it is us who, because of the practical nature of that particular industry. No, there's a conflict with the Islamic banking actually. But Islamic banking is out here. They were not, they do not term it as interest first of all. So yes, we embedded it within the costing structure. That's a different concept. But I think the exclusions is important here, and actually the exclusions were provided mainly for the benefit of the local banks here, right? Or of course the government, right? So you know, government issues a lot of Susuk bonds, or also the coupons are issued by the Central Bank of Oman from time to time, so that their interest cost is not increased. The tax authority specifically excluded them from the exemption of applicability of withholding tax on interest. Similarly, all the interbank loans, because the main purpose is to provide liquidity rather than charging or paying interest. Therefore, any of those instruments with less than 5 years was excluded from applicability of withholding tax on interest. And then last, any amount paid by the banks on their deposits will also not be applicable for withholding tax. Any questions on this? No. So this is specific to, there's no exemption from a related party interest payment. This was specific only to the banking industry.
Okay, means specifically for a LLC company, if he pays to the foreign banks,
withholding tax is applicable. Currently not applicable because of the royal directive,
okay.
But if the royal directive finishes, then it will become applicable. And the whole purpose of withdrawing, or not withdrawing, but giving this suspension was to continue to attract with investment in Oman. So it had a non-tax angle. See, each tax law in a country has always two objectives, two primary objectives. One is to collect money, to serve for the community. but then also it has whether you want to attract or not attract foreign investments. So how you frame that provisions is very important. Before I go to double tax agreements, just one thing I will.
Sorry, one question actually. If I have a, let's say I have a property in Dubai, and that property, I took a loan against that property, and I have a company which is a related party company here, and we are paying the interest of, let's say, normally we are not paying, but sometimes we are short of cash, so we are paying the EMIs of that loan. So that interest payment, withholding tax will apply.
So you have a property, that property is registered in the name of the company.
Actually, the owners are the same. Okay, we have a company here, we have a company in Dubai.
Okay, but fine, withholding tax would apply.
Would apply. Huh?
Yes. Except I would just say,
Okay.
if you think of the GCC, economic benefit, and if there is a benefit can be probably equal treatment under that we
So
can be
it
looked.
is, we can avoid basically.
We have to check that because now the question is you are paying actually to a bank.
No, we are, means you can say so, but we are paying directly to our company first, then they will settle with the bank.
Okay, so if you are paying, so again the question is when you are paying, the fact pattern is slightly different. When you are paying to your company, you are paying them as what?
As a intercompany transfer.
So there's no withholding tax on intercompany transfer.
Okay.
So
if it is a direct payment to the bank, then
no, direct payment to the bank for what? Because
Then
you don't have
absolutely,
any. So
absolutely.
you still have to route it through the related party. So
Okay.
how you see, simple, tax planning is
actually
allowed,
my question
tax
was,
avoidance
if it is a related part, let's say the property is not making by the loan, okay, I need to put up some money also from my side, from my company side. So we are considering that money as a related party loan, okay?
giving
So-
loan, no withholding tax. There is no.
Because of this thing.
No.
Okay.
Because it's loan.
Okay, okay.
So then you are charging interest, right?
No,
When
no,
you
no.
give a loan,
Okay,
you
one
will
is a
get-
bank loan. One is the loan which is provided by the shareholders from here to that to a company based in Dubai. So for both the things you are saying, there will be no.
when you pay to the bank for a loan that is taken by the Oman company, irrespective whether you bought the Dubai property with the same money, but you are paying interest to the UAE bank, you will have to deduct withholding tax. But when it's a transaction with the related party, you are giving loan, so you will charge interest. So it's an income, not an expense, so withholding tax would not apply.
Would not be.
Let's assume that the property itself is with the name of the UAE company, and the Omani company is paying interest for that property actually. Can't we use point number 7, which
No,
is...
but point I'm asking is, how will they pay interest? They have funded, not taken the fund.
So they bought a land or property in Dubai, and with the name of Dubai company, they pay interest every month, or they pay installment for that property. The UAE company is insured of the cash, for example. Oman company will pay on behalf of the Dubai company.
Okay.
This payment to the bank directly.
Okay.
I'm just giving an example. If it is directly to the bank for that property which is located in Dubai and in the name of the Dubai company, will that attract withholding tax? Or we can use the point number 7, which is services related to a property outside
Yes,
of mine.
but that is for services. This
It's
is not a service then this is a interest.
interest.
So that's where, again, that question of where the category becomes important.
One more question I have. Usually, we have some people who are not in Oman. They are working from India or some other countries, salespeople particularly. So those peoples, we don't have a formal agreement. Means just like we are not giving visas to them. Okay, they might have giving the consultancy. So those things, there is a loophole also. Okay, but which I will cover later on. But the thing is that so since somewhere I have read in the DTAA that if we have a formal agreement with those employees, those whatever the payment I am making to those peoples will not be covered under withholding tax.
Simple. We will see whether those are your employees or not. If those are your employees, then withholding tax would not because you are paying salary.
Correct.
If they are not on the company's payroll, that means they do not have visa, etc., then they become third parties. Whether freelancer, consultant, corporate, withholding tax would apply. In India.
In India.
Yes.
And they are working for me.
Yes.
Okay. They are on my payroll here.
Yes.
And I pay salary direct to them.
Yes. No withholding tax.
No withholding tax.
No. That is there. Not here, there. In India, not, yeah, that's what I'm saying. In India, not here.
They are on our company payroll, but they are not on Oman visa. Because they are in India, they don't need any visa.
No. Yeah, that is the key. So if you say on our payroll, it has to be assumed that you have the employment contract with them, you have the employment visa with them. If you do not have the employment visa, okay, I will tell you, this is very common.
The sole purpose is because I don't get the visa.
Exactly.
Okay, that is the reason I am hiring.
Okay, I will just explain this. I will explain this.
Yeah.
From a related party perspective, and this is very common, that you take services, why I am saying services, it is technically service, from your another related party. And many corporates do this, not only for visa reasons, but also other reasons, because there's a higher cost in one country, so they set up a back office in a country where the cost is less, and they take their own company, right, set up. But the employment contract is not with the Oman company, but with the company in which they are employed, for which they are providing the service. From a withholding tax perspective, this is a service from one related party to another related party. So when you said that they are under my employment contract, I was assuming it is in Oman employment contract, visa, etc. Therefore, it will not apply. Anything when that fact pattern changes, withholding tax is most likely to apply.
Gaurav, suppose that company charges management fees to India, to Oman entity, and we pay withholding tax. And the tax authorities, whether he can dissolve the management fees in the corporate tax also?
Another clear, corporate tax is the tax of the Oman taxpayer. Withholding tax is not the taxpayer, not the tax of the Oman taxpayer. But it is the foreign company's tax payment.
Yeah, but the moment I pay withholding tax, it becomes my expense, right? The management fees portion. So he has indirectly agreed that it is my expense. So how this can be charged two times?
Okay. So two elements we are discussing here. One is whether the deduction of the management fees itself, and second, the deduction of the withholding tax of the management fees. Right? Now, management fees, if it is coming from related party, then of course you need to have arm length of transaction, etc. to prove, and then there will be no deduction. If it is coming from third party, and then of course the tax authorities are unlikely to challenge. Now, the withholding tax, it's actually, now this is my view, let it be very clear, that it should technically be allowed as a deduction because it's a cost to you, right? But the point of the tax authorities is also valid when they say that it is actually a tax for which no deduction can be given because it's a foreign company's tax. So that's a solution to this, that you have the complete expense invoice rather than you have to gross up and then do it.
Okay, the last question on withholding tax.
Yeah.
Typical scenario, especially in the GCC region, we'll have a lot of branches in Oman of the companies in the GCC or outside GCC. So any specific guidance on the payments made by the branch to the head office? How are they treated in withholding tax?
My first slide covered it. Withholding tax is applicable.
It's applicable.
Payments made by taxpayers in Oman. The branches, the PEs are taxpayers of Oman. Okay, let's move on to double tax agreement. So just before I start on specifics to say anything, the point here is double tax agreement is not compulsory to be used. It is voluntary. You want to use, you use it. You don't want to use, you just ignore it. Simple. So that means you will use it only if it is to your benefit. Otherwise, you will not use it. Sometimes you may still take a contrary stand, and there are multiple exceptions, but that I leave it to the tax planning. So Oman tax law provides specific rules in terms of, sorry, any questions from the Sohar team so far?
Yes, sir.
Hello. Yeah, in the hedging arrangement, the differential payment is attracting withholding tax as interest.
Okay, so hedging arrangement can, depending upon how it has been defined in the agreement, can either fall in interest element or it can fall under the services category as well. So if you now, depending upon again the agreement, if it is on the interest element for the current suspension, it would not apply, but it will then apply from 24 onwards if not extended. If it is categorized as services, then withholding tax would apply. Now we have to see the specifics of the agreement to define under which of these two categories it is likely to fall.
Whether machinery service provided by the overseas manufacturer, which includes spare part cost also, is attracting withholding tax?
You have to segregate the spare part cost and the service cost. If you do not segregate, if I am the tax authority, I will say pay on the full amount.
Sir, my question is interest. You have told us that the withholding tax has been suspended, but what about other charges like we have discounting LC charges, discounting charges,
These
and
are
other reimbursement?
These are most likely to be services and not interest, because you are taking a service from the bank to which is a credit worthiness of your corporate to avail that service.
Another question is like if many services are RCM is applicable. So the withholding tax calculation will include the RCM also?
No, you don't need to include the RCM within it.
So there are like we have a branch or we have a company here, and its parent company is incurring some expenditure in Oman on behalf of that company, and that parent company is in like UAE. So the company in Oman is reimbursing the expenses incurred by the parent later on when it receives the money like that. So that kind of reimbursement is withholding tax is applicable?
You need to go back and see what is the specifically the payment under the reimbursement, and if it falls within the categories of specified payment, withholding tax would apply. You can't take the safeguard of reimbursement and not pay withholding tax.
No, like they have paid salary to Omani employees of the company and like that. But we have to ultimately pay outside Oman to the parent entity.
Pay it from Oman, you paid to UAE and the UAE company paid it. So do you have then reimbursing them? Fine, it's still a salary element, so it's fine, no withholding tax would apply. But you have to prove that full with the documentation that for this reason it had to do in this particular way.
The onus is on the SSC.
Yeah, this is Anup here. If a Omani LLC company takes a loan from a foreign bank and pays interest to the foreign bank, is withholding tax applicable on that?
It is applicable, but currently suspended.
Currently suspended. So when is suspended up to which date?
5th of May 2024.
Okay, thank you.
One more question.
So one more question. My name is Deepak Adnani. I have a question. Suppose we are having an agent outside Oman for handling our export sales and we pay him commission. Is that taxable?
You have paid to whom?
I am appointing an agent.
Okay, yes, it would apply.
Oman.
It would apply.
It would apply because he also clearing goods and everything. It's a commission paid to him.
Yes,
it is taxable.
Yes, it is a commission. It's a service for selling your goods or bringing business.
Okay, thank you.
Yeah, Anup, again, one more question. Suppose when you are recruiting an person in Oman by a recruitment firm
It is
situated
applicable.
outside Oman,
Yes, it is applicable. It's a service.
it is a service, so we have to pay withholding tax on the services, right?
Yes, yes.
Thank you.
Okay,
Like
let's.
what I have understood for the withholding tax is that the simple principle, if I am taking it as a deduction, it has to be offered as income by the other party, correct? If it is not happening, withholding tax should happen. That's, I think, the spirit you have to look at every
Yes,
time.
spirit, but still within the category.
Within the limits and the exemptions.
Okay. So let's move on to the double tax. So I said laid the background already, and this is the specific Article 120, where it provides the tax authorities the right to engage with the foreign companies, governments to enter into double taxation avoidance agreement. Just before moving in and trying to understand the overall flow, which will summarize the whole, the concept from a double taxation avoidance agreement perspective, let's discuss how a double taxation avoidance agreement becomes applicable. And why I am saying so that it is very important, because remember when Unmesh asked one question in the quiz, what was the latest DTA sign? So there was one answer on Qatar, and he said, no, it's Sri Lanka, right? So the point here is whether the treaty is effective or not. So his answer, question was signed, Qatar is signed. It is not effective, that's a different reason, right? But you can take benefit only and only when a tax treaty becomes effective. So there is a clear democratic process from signing and effectiveness of the tax treaty. So just, it's not there in the slide because since that came up in the question, so for everyone's benefit, let's just quickly discuss what are the various steps. No, I'm saying from the perspective of how a tax treaty becomes effective. Right? So the first element is two countries' governments meet and they sign an agreement saying the tax treaty will be in place for between us. So that's exactly happened last year, towards the end of last year, when His Majesty and His Majesty from Qatar and Oman both met. I think they met in Qatar, and where they signed that there is a tax treaty that will be agreed between both the countries. So that's the first step. What would be the second step? No, that was done. So that signing included the draft agreement as well. So that is the first step. So tax authorities did the work beforehand. They prepared like the MOU, right? The MOU is done and everything is just signed later on. Yeah, so once the two countries head or authorities meet, they sign, that tax agreement will be signed. Then they come back to their respective countries, and based on their local country's legislative process, they pass that tax treaty as a resolution. For Oman, issuance of royal decree is the process. For India, the parliament has to pass and then president has to sign. In Canada, it is different. In US, it is different. So the sentence or the key words are the respective countries' legislative process has to be passed to approve that treaty. So Oman has done that, and the tax treaty is already published in the official gazette. So that is one step, and then same has to be completed by Qatar as well, which has not happened as far as I am aware of. So say that happens tomorrow. So that is the second step that gets completed. But treaty does not come into existence. The Oman authorities will have to go back to the Qatar authorities and notify that they have completed the process. Again, I am not sure whether that is done or not. Same, the Qatar authorities have to notify to the Oman authorities that they have also completed the legislative process as per their country's legislative process. No. Once this process is done, then the tax treaty defines when it will become into enforce. It is already defined in the treaty. It could be the date when both countries or the last notification happens. It could be the date from 3 months, 6 months from the last legislative process, or it could be from the beginning of the next year. So it is defined within the tax treaty when it will become effective. So this is how a tax treaty becomes effective. So once the tax treaty becomes effective, then you can avail the benefit, not before that. And I am very true, because I have seen people started taking benefit under Qatar when it is not effective. So I am giving tax authorities that they can investigate what are the payments to Qatar now. I am here, I said, I am here as individual today, so I will try to benefit both of the parties. Okay, so let's focus on the flow, and I think this will then make clear for today's that how the tax treaties benefit you have to consider. The first point is you have to see if the payment is made outside Oman or not. If the payment is made within Oman, no need to think anything, withholding tax would not apply. And if yes, payments made are subject to Omani tax law and withholding tax law, which are those 5 categories. If it is no, thank you, no, withholding tax would apply. No, fifth one is interest and dividend, which is currently suspended, but then if it is yes, then you can see if you want to take the benefit if there is a DTA available. If there is no DTA available, then you have to pay 10% withholding tax. Then you have to see the effectiveness of the double tax treaty. If it is effective, then we go to the next step. If it is not effective, you pay 10% withholding tax. And if it is effective, you don't take the benefit by default. You still have to go through the administrative process of claiming the benefit. But before that, you have to see whether there is a benefit available for you or not. And you will take benefit only if the rate prescribed is less than 10%. If the rate prescribed is 10% or more, better pay 10% and just forget about the tax treaty. And if the benefit is available, then you go to the last point, that you apply the benefit and take the relief from the tax authorities and do not pay withholding tax. So which category? Service category is 15%. 15. Yeah. So I'll just, this is not an, it is there in under Oman-India tax treaty. So the point is, the tax rate under Oman-India tax treaty for services is higher. Then why you would use the treaty rate? You will use the local rate. Yes.
To talk softly. So I have noticed that people take the credit without going through the necessary procedures, because they've read it, oh, it says 0%, and then they apply 0 and they don't bother. So if you can mention the procedures, it will be nice.
It is there. It is coming up.
So in this case, I think we will have to look into the contract itself, whether it's signed with the local one or the foreign one. This is for the purpose of...
No, I would say go back to the first slide. Last condition. The PE is there, but the amount that you are making payment is not attributable to the PE. You will deduct withholding.
Yes.
Generally I always say when there is doubt, go back to the basics. Basics will define half of the problem. Okay, so this is the table this is not final, means this is not exhaustive, but a table which gives various countries when the treaty became effective, the 4 categories mainly that we use, and the rate of withholding tax that is prescribed in the treaty, right? So where there it is less than 10% are the areas where you can look into it. So this is also the same. So there's no point in going in any detail here. So I'm just sharing this for it. So this is the Oman-Qatar tax treaty, not yet in force, so don't take the benefit. But for everyone's ease, I'm saying domestic rate in Oman is 10% across. Then domestic rate in Qatar on these elements is 5%. So when the treaty comes into force, the double tax treaty rate is exempt, which is 0% for interest and services, and 8% for royalties and technical services, whereas dividends is either 0 or 5% depending upon the shareholding. No, it's not average and rounded off. It's just the matter. I could have done it in a different way as well. It's just that it flew in that way in the presentation. So basically, then actually, if you see technically, an analysis is that Oman companies are going to benefit more rather than the Qatar companies being benefiting from. So that means actually Oman is likely to get more foreign investments from Qatar, because if they repatriate back, they are going to get benefit from. One of the reasons for a tax treaty is this itself, because of attracting investments from outside. Tax credit, so this is also important. This is just reversing the way, but trying to make sure that it is covering both parts. So if a foreign company has suffered a withholding tax, which the Oman taxpayer has paid, they can claim the credit of that withholding tax in their home country, depending upon, one, the local legislation, two, if there is a tax treaty. Similarly, Oman also gives benefit of the withholding tax which Oman taxpayer would have suffered for being in operation in a country outside Oman. So that itself is embedded within the Oman tax law. So you don't need to even go to the tax treaty to take that benefit. So any income, most of the countries do this, give this benefit, but there are countries which do not give it as well. So I will just say most of the countries. But then where those benefits are not given, there are other benefits that they attach to it. So it's how, this is the policy decision rather than a tax law. Yes. Right. So you have suffered a tax and it is given as way of a deduction in your tax liability. Now, the important element is the last part, that you can claim the credit of the foreign tax only to the extent of the tax on that income which is applicable in Oman. So meaning thereby Oman corporate tax rate is 15%. So if you pay higher tax outside Oman, you can claim only up to 15%. If you pay less tax in the foreign country, then you can claim only the less tax. You cannot adjust with the income of the Oman entity in Oman and adjust with that. Will not be possible.
When we are saying income, it's net income, right?
Yeah.
Whereas the remittance or the billing can be a gross.
Yes.
Is there any expenses of the foreign entity that can be deducted to make the net income on that the withholding tax is payable? Is there a situation like this, or how the act is meant to be? What they mean in the act? So far we have been, they are giving the service bills, we are paying. For example, AMC or something.
Yes.
Suppose if I incur some expenditure on behalf of the foreign supplier,
yes,
can I deduct and remit, and then on the remittance I can pay the withholding, or on the gross bill?
Yeah, it has to be on the gross. So if you are deducting for a genuine reason for service not up to mark or anything, then yes, you can pay less withholding tax also.
Yeah.
But if you are deducting for some counter service being provided, you cannot net off and say, I will pay less withholding tax.
That's why I asked you the remittance amount as distinguished from income. Or
yes, it is on the gross payment, slide 1, on the gross payment.
Thank you.
The process of treating the treaty benefit from the tax authorities, again, it's not defined in the law or the executive regulations, but as a matter of practice, they do accept just a letter request along with the documentation, which is primarily comprising of the tax residency certificate, confirming that the foreign company is tax resident of that particular country, because you are taking a treaty benefit, you have to provide a proof that that country is registered in that particular country. of course, the contract to define the nature of the service, because which category it falls becomes very important, and therefore benefit can only be taken then. And then subject to, you have to confirm that that foreign entity is subject to tax, because if the foreign entity maybe is in a free zone, right? If therefore they are not subject to tax in the foreign company, therefore there could be a possibility that the treaty benefits are not available. So it has to give a confirmation that it is being taxed in the foreign country. And then they can ask for other documents, but these are the three primary documents along. If contract is not there, the invoice becomes important. If both are there, better to provide both. The treaty applications takes now, it was used to take a bit more time, but now it's being processed very quickly. So it just takes less than a week as well nowadays, except if there is some problem to a case. And the applications has to be made on yearly basis. The reason behind is that I don't think I've seen any tax authority issuing a tax certificate for more than 1 year. So if you provide tax year certificate only for a year, then Oman tax authorities will also issue ruling only for a particular year. Yeah, that's it more or less from my side. So any further questions? How you book is not important. What is the underlying transaction, that is important. Simple. That is fine. See, there are elements, for example, IFRS on leases, right? Now, leases has come in, you do not classify rental payment anymore, and then you have to amortize the finance lease expense in the P&L. It's a notional entry, it's not an actual interest, right? So you have to go back and underlying element of the transaction rather than the notional entry. And the IFRS has evolved over times and it will keep evolving, but you have to then go.
This is for our suppliers. Like for example, a supplier from India, they are giving a service here and we are deducting withholding tax payment from them 10%. So like, is there any possibility that they can take a tax credit in home country, that is in India? Like, is there a possibility that they can get a benefit of this?
It's not a possibility, it is a certainty that they can take the benefit
Okay.
if they are in a tax liable position in India.
Okay, so what are the documents that are required there?
Then you have to check with the Indian tax specialist.
Okay.
I can tell you more or likely the same documents that I mentioned would apply in India as well.
Okay, and another question is like, if we are having a foreign investment, like let's say in Qatar, so we are paying certain withholding tax for the interest that we are receiving from there, because they are deducting 5% interest as a withholding tax there. Yes. So if the DTA comes into place, will we be able to claim that particular withholding tax that has been deducted there?
Claim of the withholding tax that is currently being deducted, irrespective of the DTA, you can still claim.
Currently also?
Yes, because of the Oman tax law provides the provision to claim that foreign tax.
Okay, that foreign.
When the DTA comes in, then you will not have to pay at all.
Okay. Okay, so whatever the deduction that has been made will be claimed under withholding tax or in the corporate tax?
In the corporate tax.
Corporate tax, okay.
Because you will not make a withholding tax payment, right? You will make only a corporate tax payment. So within that corporate tax, you will say $1 million liability, and then 500,000 if has been deducted, you deduct that and pay only 500,000.
Okay. Thank you, sir.
We, Omani company, are selling a product to a foreign company outside Oman. They are charging us a fee as a marketing fee for the services. Is withholding tax applicable on that?
Based on whatever you said, I would say yes.
Yeah, it is not a discount, it is the marketing fee. Discount would not have been withholding tax, but marketing fee is subject to withholding tax.
Yes, that's what I said. The way you defined it, I would say yes.
Regarding software purchase, specifically with respect to double taxation avoidance treaty, see, it comes under the category of royalty. In your slide, you have mentioned that lots of software phases, like purchases, implementation, AMC, license fees. For academic purpose, if you take double taxation avoidance treaty of India, and that you can specify whether withholding will be applicable or no.
From a software perspective, it is either a loyalty. If it falls first, because the definition you have to go as per the Oman tax law. So if it falls under royalty, then you go and see the royalty portion in the Oman-India tax treaty. If it falls under the AMC part, that means services, you go and see the services. And third, if it does not fall under any of these two, but under the computer software itself, then the computer software category is actually not defined in most of the tax treaties. So you can say that under a tax treaty, there is no withholding tax on computer software. Yeah. So if you purely define under that, then withholding tax, you can take a treaty benefit, because there is no definition of applicability of withholding tax in a treaty. So if a treaty is silent on a particular element, it becomes beneficial.
So here you mean to say the acquisition of software from India will be not subject to withholding?
If it is categorized as use or right to use computer software.
Okay.
If it is categorized as royalty, then you have to see the royalty.
Now, secondly, the license fees, like quarterly, yearly, they pay, which is based on usage or consumption. So that in
royalty.
That, royalty.
Yes.
Yeah, but as per Supreme Court decision, they have mentioned that the software, if cannot be modified, so in that
Supreme Court of
India.
Not applicable.
No. Same thing. OECD model also says the same thing.
Yes.
If the software cannot be modified, so in that case, withholding is not applicable.
Because when I said royalty, you said you are doing quarterly payments. Right?
That also, there are various categories. One is the acquisition, they implement, they tailor-made the software.
Yes.
Which comes under that category which you said just now.
Yes. The one you are now saying is the one where it is a license once given and that's all. Right?
Yeah.
So it's a purchase for you.
Okay.
And you are not making regular payments.
Yeah. This is one aspect. Huh?
Yeah. So it will fall under the definition of again royalty. I will tell you, there is an overlap between the royalty definition as well as use or right to use computer software. The definition of use or right to use computer software was also embedded within the royalty definition before 2009 amendment. Right? Like I said, the rental of equipment was embedded within the royalty definition. So they took it out in 2009 because it is already there. If you read the royalty definition, even the use or right to use computer software is embedded within the royalty definition. So there is an overlap. You would try to argue that it should not apply, especially if it's a treaty benefit, whereas the tax authorities will say, no, it's not a computer software, but it's a royalty because of this overlap in nature. Yes, as a matter of precedent, that is the position that we have also taken. But whether it is accepted by the tax authorities or not, you have to test it on case-to-case basis. So that is a service that payments you are making to that particular country. It's yes, it is applicable, but there are some treaties with the, like UK on services, there's 0%.
Yeah, two small clarificatory questions. One is in case of double taxation treaty, certain services which are like, for example, India services are charged at 15%, but 10% is beneficial for me, so I'll use that. So in that case, the person or the entity for which I have deducted tax will still be able to claim that that benefit in its own country, even though I have charged at 10%,
yes,
right?
Yes.
That is one. Second thing, with respect to withholding tax, the free zone, is it treated at par with mainland?
From an Oman withholding tax perspective, yes.
Okay.
So free zones are exempt from corporate tax for 25 or 30 years, depending upon which free zone we are talking of, but they are not exempt from withholding tax. The logic is withholding tax is not a tax of the free zone entity. It is tax of the foreign entity. And therefore, when I said that declaration from a foreign entity. Hello.
Gaurav ji,
Yeah,
one question.
Deepak ji, you can ask the question.
Thank you. First of all, thank you for the excellent presentation and clearing the doubts. I have a couple of questions. One is, Omani company is taking some services from a foreign company for the consultancy or development of a project in Oman. So I'm sure the withholding tax is applicable in this case, and the Omani company has to deduct the withholding tax and make the net payment to the service provider, right?
Yes.
Yes. Now, if there is a change in the situation that instead of the Omani company making the payment, the parent company of a Omani company, which is a foreign company, makes the direct payment on behalf of the Omani entity. Now, how the withholding tax provision are applicable? Because the Omani company in this case is only booking as an expense and is not making the payment outside Oman. But on the contrary, the parent foreign company is making the payment to the other foreign entity.
Withholding tax would still apply, because the moment you book the expense, the withholding tax would apply. Because the
so
invoice.
who has to now pay the?
When you got the invoice, the invoice is in the name of the local entity, you book the invoice, the method of settlement can be in a different way, but withholding tax would still apply.
Okay, fine, thank you.
If there is a board member or say a consultant to the board who is a UAE national, and you pay the board setting fees to him, whether when setting fees in UAE, so whether we need to do whether we need to have withholding tax on this kind of payments or no?
No, because there is specific
GCC for that.
No, even GCC or any country, there is a specific exclusion for board sitting fees.
Okay, okay.
I think fourth category, right? In the services exclusion.
Both capacities as a
Because so in some cases he's not a board member, but he is like a consultant to the board, but he's an UAE national. So whether in that case, whether it will be he's acting in his individual capacity, not as
I
a
got your point.
Yeah.
Even if he is acting as an individual capacity,
Yeah.
the nature of payment is important. If
Yeah.
the nature of payment is a consultant payment,
Yeah.
then withholding tax would apply. If the
Okay.
nature of payment is because he sits in the board and you're making him a board fees, then it is
But under
excluded.
that GCC agreement, he is an individual. So technically, if a Omani person is not paying an income tax on a personal income, then this is also like a personal income for that person. He's not a consultant as such. He's not a registered consultant, but as an individual, he's giving the services. So whether in that case, under that GCC agreement, whether we should, or it's a gray area.
It's not a gray area at all.
Okay.
I will clarify in one sentence. And this is the main misconception many have. Oman does not exempt all types of personal income tax. Individuals still pay income tax on business. So consulting is a business, so equal treatment, withholding tax would apply. Oman taxes business income of individuals. So personal tax is not there, but under the corporate tax, individuals, Omanis pay with tax on their business income.
So in this case, if it's not a board sitting fees, if it is like a consultant to a board, still it will be treated as a consultant fees and withholding tax.
Because he's doing that consultancy as a business.
Okay, okay. Thank you so much.
Gaurav, this is Ravi from Sohar. This recruitment fee surveys from GCC country. It's still applicable to withholding tax from GCC country?
Yes, it is still applicable. The only is that if that recruitment company is being owned by a GCC individuals and you can substantiate it, then there is a possibility to not pay or not apply withholding tax. But still I would argue it is most likely to apply because it's their business and businesses are taxed anyways.
Gaurav ji, this is regarding training expenses.
There are a lot of our clients who are sending the Omani employees who are here in Oman. They're sending them to European countries for, getting some degrees. And this is for a period of 1 year or 2 years, wherein they are getting some kind of certificates or degrees from the European countries and they're coming back. Can they be called as training expenses and which will be excluded from withholding tax?
Yeah, I think so. Again, it's a bit.
So there is no specific definition for training. It is
No.
not 1 year, 2 year, or 1 day or 2 day.
No, it's not defined.
Okay.
So even if you're paying to the university as a fees,
Yeah.
University fees can be termed as for the development of the individuals.
So do we have to ensure that the term they are using while raising the invoice on us, whether we are using the term as training or it can be even school fees or something?
I think even if it is mentioned school fees,
Hmm.
it should embed within the overall
Training.
general understanding of the definition training.
Okay.
Gaurav, one of the criteria that you said that it is optional, no, DTAA is optional. You want to take it, you take it, otherwise you don't take it. Can a particular transaction which comes under the purview of withholding of tax, can they, for one set of transactions at one point of time, they can use a withholding of tax and for the other they can use a DTAA? They can keep discriminating between this and that arbitrarily without like pick and choose model.
You can do that.
There won't be any tax harassment or any such question mark as to why they are
You are
changing the
paying
size
more,
from
right?
here and there.
Not at all, because the tax authorities, you are paying more. By choosing between 1 and 2 transactions and not choosing 1 and 2 transactions, you at the end are paying more to the tax authorities, then nobody will question that.
The same thing would have applied in India, then section 274 would have been applied of raid case. I can.
So that's a specific to India case, right?
No harassment. Any more questions from Sohar team?
But again, there are general anti-avoidance rule. If there is a specific scenario which you have not disclosed, like in your question now, and it comes to the light later on, the tax authorities can still challenge it. And I'm sure there is something hidden behind your question. Exactly, yeah. So it does raise these question, right? Why it's not being done in a proper way each and every time.
You mentioned that individuals do pay taxes on their business income. Now, we don't say individual, we say Oman doesn't have personal tax. So, if there is a sole proprietary, doesn't that fall under purview of personal income?
Very simple answer. Royal Decree of 2009 is not a corporate income tax. It says income tax. It is an income tax on corporates and establishments. And establishment defined means sole proprietors. So sole proprietor is a definition or a taxpayer within the income tax law.
Okay, so if there is a CR for a sole proprietary, that is an establishment.
Yes.
What if there is no CR?
The law does not say that the CR only will be termed as establishment.
Okay, then how do we, because when we talk about individual taxes, we are referring to as personal tax or personal incomes other than business.
Yes.
Okay, now anything can be business income, even if I'm doing as an individual, but it can also be always a personal income.
Yes. So
Okay.
One of the common categories to term a stream income as a business income is the regularity of its being done. If you are just done a transaction for an Omani individual sold a land once in 5 years,
Yeah.
it's not a business. But you keep buying and selling, it becomes a business.
So I will give one very, very peculiar example. Okay, a person sits on board of 50 companies.
Okay.
Okay, it's personal income.
Yes.
Now there is a specific exemption on that WHT that we understood.
Yes.
It's an income.
Yes.
I would say it's a business income. Or
You-
it's a personal income.
I would term it as a personal income, but not a business income. But sitting on a board, it's not a business, right?
I mean 50.
Yes, it's 50 or 20 or I think number does not matter. I think first you have to also sense the.
This is the out of scope question. So, okay, thank you, Gaurav, for this wonderful session. May I now request Subramaniam sir to please felicitate Gaurav. Thank you, everybody. Thank you, Gaurav. I request Subramaniam sir and Mubin sir to be on the stage. On 15th August, we celebrated 75th year of independence, 75 years of India's independence, and there was a wonderful quiz organized by our member. Where is Sangeeta? Thanks to Sangeeta for organizing the quiz on 15th August. And it's time to distribute the prizes. So the third winner is Sarita. Let's give her a big round of applause. Second winner, Kalyan. And the first winner, Priyanka. You need to come with the name tag, Priyanka. Thank you, Mubin sir. Thank you, Subramaniam sir. Thank you. Now I request CA Sangeeta to present formal vote of thanks.
It's really great to see all of you still here beyond 8:30 on a working day. And the whole of the credit goes to our speaker, Gaurav ji, for having such an amazing session. And he has taken the concept from A to Z. And I would say that he has not left any of the query unanswered. That's really a great session, an amazing session. Thank you so much, Gaurav. First and foremost, he's not listening. First and foremost, I would like to extend the gratitude to CBFS, our sponsors, and for all the facilities and the support whatsoever has been provided. Thank you, Tally, the representative who is present here, and all the sponsors for our chapter. And thank you, the caterers and the IT people, without which the Sohar team would not have been able to join us today. Thank you, Sohar team, for joining us in large numbers.
Thank you, Sangeeta ji. We all are live and listening still to you.
Yeah, thank you. Thank you, all of you, for being such an amazing audience and participating and making this session very interactive. Thank you, all the MC members and the subcommittee members who have worked behind the scene to make this event very successful. Thank you, our MC for today, CA Unmesh. Thank you, big thanks to everything and all whomever I have missed to mention. Thank you.